ratio.
All right, so we got part one of our professional issues presentations going on today, and I don't remember the group orders, so I actually just went by last name of the person that we're talking about. So we're going to do Richard Grimes first, then Avis Love, Tommy O'Connell, and Hamilton Long in that order. I'm going to go on my email. So I'll just set up.
So I hope you're ready. You have a big party soon.
All right. I think we're good. We'll see what happens.
Okay, ours was Richard Grimes, Staff Accountants.
So this sort of took place, I believe it was in Pittsburgh. The company that was being audited was Michaela Medical Group. It's essentially a medical group that makes a bunch of interests to help diagnose patients. The audit team involved in the case was an audit senior, rookies, and staff accountant, which is Richard Grimes. Seniors just kind of was supervising the other people in the audit team, and the rookies and Richard Grimes are both fairly new. I think they've only been through like 2 busy seasons. Executives also involved in this case is Controller Russell, and Daniel Slater is COO.
Okay, so now getting into kind of what went down. Richard, he had to get to work early, and he's like, I love getting to work early. It's such an empty office. And he starts getting to like do his work. He goes to like a file cabinet to just start working for the day. And he's like, oh my gosh, there's other people here. He sees Slater and Russell. And then he overhears their conversation of Daniel saying, one of our huge customers is going out of business, but they make up 28% of our receivables. And Russell is like, oh my gosh, we need to report this. However, Daniel's like, no, it won't be announced until after the 10K is posted, so we should keep it a secret, not tell them. And he's like, I don't really like that idea, but we'll go with it, I guess. Well, Richard's just hiding around the corner. And then Daniel catches him and he's like, what are you doing here? How dare you? Are you like watching us? And how long have you been there? And Richard's like, oh my gosh, I've been caught. He thinks he doesn't know what to do. And Daniel's like, whatever, and walks away. And the other guy just doesn't really say anything and walks away eventually.
The way they should handle this, there should be like a big sit down meeting with all of them. And the accountants are like, oh, this bankruptcy is going to impact our stakeholders as we address the financial statements to ensure transparency, because a large receivable is going to be a collectible in the near future. And everyone is okay with that.
That's what should have happened. And as in terms of like what Richard should have done, he kind of got yelled at for basically looking like he was sneaking around and like trying to snoop. But I mean, he wasn't really trying to do that. He was just filing a cabinet and he noticed that there were people in the room and he didn't really want to bother them. So he didn't say anything and he just happened over here. But this still isn't really professional to just like kind of hide in an alcove while you are blatantly listening, even if it wasn't your intent. So I don't think it was his responsibility to make himself known since his intent wasn't to spy, but of course I don't think it was very professional. So that was one of like the case questions. If they didn't like make the bankruptcy known, he would, since he was one of the internal auditors, he would have the responsibility to kind of like bring it up to maybe board of directors or higher ups, because as an auditor, that's your job. So yeah, and I think another case question was like, would Slater treat him differently if he was a woman? And we were kind of, in this case, like we think a lot of the times this maybe it would have been treated differently, but he was already pretty harsh. Slater was pretty harsh on Grimes, so we weren't sure if Slater doesn't seem like that nice of a person, so we think he honestly would have treated a woman just the same. But yeah, so that was kind of the case and what we learned from it.
So what is your ultimate conclusion if an auditor gains audit evidence through this particular method, should it be acceptable in decision-making for the audit?
Technically observation, just secret observation.
Acceptable, and I think if anything, it goes back onto the people working at the company, like they could have had the door shut. They were talking about private information.
Or,
And I-
don't have to be in conversations in the building, like maybe happen at lunch, where the auditor's not gonna hear you. Yeah.
And it wasn't really his intent to obviously like spy on them.
Yeah.
It just was like yeah.
So is kind of is the driving issue the intent here, like that Richard Grimes did not intend to overhear the information, but did as part of just incidental other part of the audit? So the argument would be is, say, for example, the audit team set up a microphone in the conference room of the two talking and they didn't let anybody know about it. Then that would have a different tone to it. All right, one last question. Richard Grimes look a lot like Dylan to you?
Yeah.
We got our inspiration,
Like,
like image.
Yeah, I could see Dylan wearing that suit with the kind of the same confidence and expression. All right, good job.
I don't remember exactly what slide, so if you get to one that's like pluses and nine, just let us know.
Okay, I know which ones are mine.
Avis Love. So the background, Avis Love is a 22-year-old staff accountant. Her engagement is a year-end audit on Lowell Incorporation. It's a retail store, chain with over 100 stores, and she's assigned to perform cutoff tests for 20 randomly selected stores. Here's a sample.
So the actual fraud that occurred was basically her assignment was to investigate 20 of the stores. And what she did was she was backdating cash receipts to see if they were recorded in the proper period. And the reason that this was such a high risk area for this particular audit is because the company was running a 3-month sales promotion that they'd never done before, where if they had higher sales, the managers got a bigger bonus. So they were worried about them recording sales in the previous year from the current year. And she found that fraud had occurred in 3 of the specific stores, one of them being store 51, which we'll talk about on the next slide.
Yeah, so store 51, she identified the proper backdating for cash receipts in those 3 stores, but this was the biggest one. There were discrepancies where the receipts were recorded in the cash journal before the actual bank deposits occurred. This violates cutoff procedures and inflates sales from the bonus qualification under the incentive program they had set up. We'll talk about kind of the material impact of this discrepancy, but there was definitely a problem that she caught and didn't.
So she kind of ran into this ethical dilemma because she didn't want to particularly report store 51 because she had kind of got to know like the manager and his family and everything during the audit. And it also wasn't like a very big amount. And so she was just thinking, what if I just use a different store? Because she only had to do 20 stores, so she could technically just use store 52 and drop store 51. But we all agree that that would obviously not be ethical, since I mean that is the purpose of random sampling, to select random stores and evaluate them. And obviously once you know a fraud has occurred, then you would have to report it.
So then that brings the question of like, should auditors be like friends with their clients and how you kind of go about that? So the CPA code of conduct does not explicitly state that auditors should not develop friendships with their clients, but it does say that they should be independent in fact and appearance, which can be very difficult when you do have those type of friendships. Auditors should limit, or like in this case, Ava should have limited her interactions with those individuals while working on the client. They could also rotate the auditors, so that way she could let her staff know like, hey, I'm friends with these people. I don't feel comfortable working on this client. And they could rotate them. That way she doesn't have this big ethical choice of whether she should keep store 51 or not. So parties potentially affected, Lowell Incorporated, the company they're working on, the store managers and the audit firm. The company is obviously their higher ups want their accurate financial statements. They want to know if the fraud's occurring. So it'd be pretty unethical for her to not choose store 51 just because she knows the people and is friends with them that work there. The store managers, these are the people that were in charge of kind of the financials and the fraud to begin with. They might not actually face any actions. Like she mentioned in the case, it's a very small amount. So she might not even do any harm to reporting the fraud that's occurring. And then the audit firm, their reputation's at risk if they later do find out this is a fraud that she should have found out, but then she didn't report. Avis could be fired, and then the whole firm's reputation could be at risk.
We also talked about, these three parties would have a hard time figuring out if she just switched store 51, 52. Like it would just be her responsibility, so all three of these parties wouldn't really know about it.
So the key audit objectives, we identified three main key audit objectives for this fraud in particular. So cutoff is obviously being the biggest one, since that's the actual fraud that did occur, since the transactions were not being recorded in the proper period. Existence would also be another really relevant audit objective here, because whenever you're talking about sales revenue, oftentimes they'll just record fictitious sales. And so existence is really important. And then, of course, accuracy, because they might take sales that actually occurred and just inflate the numbers. So they want to make sure that that's accurate as well.
So were the cutoff errors material? We talked about the fact that the bonus really only changed by a little bit. It was actually slightly more than $100. They said that they were backdating the cash receipts 2 days to inflate the sales. If you think about it, I don't really know. We don't have the exact numbers to see if that's material, but it's definitely inappropriate to do so. But the main question that was asked at the very end of the case was, is it worth manipulating sales just for a slightly more than $100 bonus based on the bonus program? And we both said, or all three said, that it's not appropriate, and I don't know why you would do that. But that is the end, I think.
So we got
Yeah.
So that's an interesting hypothetical question that you've got set up. Let's go back to that last slide. Okay. All right, so your consensus as a team is that it's not worth it for $100.
Yeah.
Yeah.
It's worth it for $500,
I don't know.
$1,000.
I mean,
I think there's definitely a point when it gets there, then you'd be like, oh, okay, it'd be worth it. But then obviously, it's a lot easier to see for Avis, like, she's having this ethical dilemma at $100 because she knows the people. And it's like,
Yeah.
once it gets up, like what changes for her as well to be like, okay, this is important, I need to report it.
I
Because I
also-
think
no, go ahead.
her reasoning was that she didn't feel like $100 was even worth it, like it's not even material. But yeah,
I think she felt more pressure from not getting her friends in trouble or having more problems to deal with store 51 specifically than the actual bonus itself. But
All right, I've got an interesting scenario I want to try, but I want to ask a few more questions before we get to there. All right, so do you think that what is the line between friendship and professionalism?
Kyle, you want to take this one? I think it really comes from like how you know each other, like the basic interactions you guys have, but like you can be friendly with your coworkers and it doesn't affect any dilemmas that would come up like with this. But I don't know. I guess it just comes to like the specific circumstances, certain relationships.
Yeah, I guess it's fine to be, as friendly as you want, as long as it doesn't affect the professional work.
So this is always the challenge that the way that I I guess I analogize this. So I say student-teacher relationship, because I like to be friendly with my students, but I also have to make them understand that when I grade you, it's nothing personal. I'm doing an objective basis. It doesn't matter whether I like you more or less than those students. I mean, I shouldn't say that. I like all my students the same. No, but how do we actually say to the point that these friendships start impairing our decision making? How do we actually draw the line there?
I would say if it considers, like in this case, Avis, she considered not reporting the fraud. It's like if you're to that point where you can't be okay with doing your job and reporting it accurately, then you probably shouldn't be on the client.
So You talked about the effect on the stakeholders and how the accounting firm could be held accountable. Do you remember when we talked a few, I guess like a couple months ago, we talked about, I think it was Health Management Incorporated and the Private Securities Litigation Reform Act, where the auditor has to be found have knowingly participated in the fraud. Let's say in this scenario that this grocery store chain was sued by its stakeholders or by its stockholders. They said there was a fraud going on here that's related to the reporting of store sales, and we're not happy about this. Do you think that the auditors could have been held liable if Avis had decided to ignore Mo's oversight or his activities?
I was thinking about that, but I mean, reviewing what the procedures, the cutoff procedures that actually happened, I was thinking of how could they get caught for switching 51 to 52 or something like that. So I guess through the review process, they would also, if they get caught, they're definitely liable. But I'm more questioning like how would she get caught for switching the two stores? But I don't know. They'd obviously be liable if they were caught messing with financials, but.
Yeah, I don't know. I think it's tough because like she just randomly sampled and happened to get store 51. So like if she gets, I said, store 52, then like I guess there's no way to say that she deliberately didn't choose 51. So I don't know.
All right, so let's try something interesting. So how many markers are up there on the board? I think there's only 2.
Yeah.
We're gonna write the
Yeah,
amount that we need to.
So yeah, I want each of you to, on the board, write your amount that you would be willing to commit fraud or commit this fraud for, fraud for. And I want you to hide it because I want to compare your answers among the group. Okay. So yeah, just write down your amount and then hide it from the other group, and then we're all going to
That's
reveal it.
quick. It would be already.
He's had
this number in mind for a while. Yeah.
Well, I'm based off something else.
Can you pass the marker over
I got
to Kyle?
As like the auditor, if I was in her position, like what I would
If you're
do.
a Mo, like how much would your bonus have to be in order for you to commit this fraud? Because $100 obviously is not enough for you guys. So I'm curious what. All right, let's reveal it. What's the amount?
$450.
$10 million and $50,000.
I would obviously never do this, but this is how much my rent is next month. So
Well, at least you have a justifiable criteria for your basis. All right. All right, good job.
Can we ask you the same question?
What's your word?
No, I can't calculate that honestly right now, because if I was going to do a legitimate calculation, I would have to actually extrapolate the risk that I've thought of being caught versus what my payoff would be. But there is a number, I will tell you that. Probably not as high as 10 million, probably not as low as 450.
I know.
Yeah, I told him. I called him.
Yeah, I know. Holden was like, Holden smiling.
So, Kirsten, go up to the black bar, into the dots. Click on that and go hide video, flooding media controls.
Here, wait. Yeah, right now, okay.
I'll let them get out of the way. Okay.
Okay, so our guy was Tom or Tommy O'Connell. So we didn't have too many key parties in ours, but ours is Tommy, obviously. He's just a newly promoted audit senior. He's an ambitious guy. He wants to be manager within 5 years within the company. He just wants to prove himself. And his wife hates how long he works, but you know. And then we have Carl, almost the exact opposite. He's a new kid. I think they said like 6 months of experience, or not even, just like halfway through the first busy season. And then he comes from like rich roots. He's inexperienced, as I said. He's performing too well. They're suspicious of him cutting corners, and then he loves golf. There was a point in the story where he said he got done with his work early or something, and he was like, I think I finished all my work. I want to go golf now. Is that okay? And he's like, no, like I got way more work for you to do. So That's just kind of attitude that Carl has. But the case here is Tommy's put in charge of his first case and well by himself. And that's the Alta Mesa Manufacturing Company. And then he's given a staff member to work with him, and of course that's Carl. So Tommy learns, as I was saying earlier, that he's been suspected of not completing all his work, or not all his assigned audit procedures and still signing off on them. So he clocked, I think, 60 hours when it took previously 110 hours to complete in the prior year. And they had budgeted 100 hours. So it kind of looks like Carl's just this really fast working guy, but all his managers and everything were suspicious. So the audit was completed. Tommy thinks about telling the audit partner about what he is suspicious of because he found similar instances of Carl, just kind of areas where he felt like he skipped out on but still signed off. But he ends up not telling anybody about it, and no trouble came of it because then Tommy left and went private, and then Carl just went to go work for a Wall Street investment bank.
Oh, this is me. So in the questions, and wanted to break down kind of the roles of staff and senior auditors and see what, how their jobs differed to kind of give perspective to the situation that both these parties were in. And first, I want to go back to the first slide. You know, just because of this case doesn't mean it's all black and white. There's nothing wrong with getting your work done and liking to golf. So Carl's not necessarily the bad guy in this situation. But senior and staff auditors' jobs do differ quite a bit. You think in your head that manager, they're the one that controls the job or the audit, but in reality, they kind of put that that day-to-day operations in the hands of the senior. One, to give them more experience, and two, because the manager is working on more complex things, or maybe they have multiple engagements that they are working on. And so the senior really has a lot on their plate when it comes to the engagement. They help budget time. They understand where every step in the engagement is and making sure they're reviewing the work of the staff auditors. And the staff auditors are the guys on the ground getting the actual work done, doing the grunt work, as you could say. And they report their time to the senior and the other members on the engagement team. We'll go to the next slide. We didn't write anything on the down. We actually didn't even discuss this slide when we made it, but we wanted to give our perspective of walking in Tommy's shoes. Now, remember, Tommy is the senior, because a big part of this case was what should have Tommy done whenever he learned that Carl was going to be on his engagement? Should he have said anything, or what was his reaction he should have had? When I was reading it, and if I'm the senior, I'm in charge, I'm leading this engagement, I think that it should be my responsibility to ensure that engagement is done to the fullest of my ability. And if that is letting the manager know of doubts that I have about a staff auditor's work, I think that's my responsibility. Or if you don't feel comfortable bringing that up, or you don't have that kind of relationship with the manager, going to Carl and establishing, hey, we're on this together. I know this is going to suck. We're moving. We're spending 6 months in a place away from home to get this engagement done, and we need all hands on deck, and we can't be underperforming on the work that we're doing.
Yeah, so in the kind of the same vein as Dylan, if I am the senior, ultimately everything that happens under the audit is going to be my responsibility. So, you know, I'm sitting there chatting with the manager. He tells me Carl's going to be on it. At this point, I don't have any direct evidence that I can accuse Carl of not doing his work, but I can, at the very least, I'd probably bring up the rumors. That's like, oh, hey, rumor kind of says he might be skipping on work a little bit. Although, thinking about that, that might just mean the manager is going to put it on me to make sure that he is getting it done, which, you know, again, as a senior, it's already my responsibility to make sure that's happening. So it's just, it's now out in the open that, yes, this is your responsibility to make sure it gets done.
Yeah, I think if I was in that shoes, I probably wouldn't bring it up at first, like right when I first heard it, because of what Matt was saying, how there's not much evidence. Like all it's just rumors that he's heard so far. So I probably would have not said anything at the very first point of hearing about Carl being on the engagement. I would want to see Carl doing it firsthand, get that kind of evidence, and then either confront Carl first, and then if nothing changes, then I would go probably up to the manager, and that kind of thing. And so then I would actually bring all the evidence kind of thing, showing that I tried first, and then just nothing's working. That would be my plan.
They emphasized in the case how like, not distraught, but Tommy had a dramatic reaction to finding out that Carl was gonna be on his engagement. And then decided to do nothing. And that kind of comes to bite him in the butt. These are some actions that we think that that Tommy should have taken with Carl. You know, sitting him down, explaining why they need him to be focusing on his work and not doing other things, and not completing his steps in the audit process. And then some additional steps you could do after talking to Carl or attempting to console with him. We said maybe try to get another audit staff member on the engagement. I know that'd be hard, but if he really thinks that Carl's not doing his job and he's taking on all this work, which is what he did in the case, maybe working with the manager to try to get more help, asking their mentor in charge for advice. I'm sure they've been in situations like that before. And then, yeah, seeing if there's any other help that could come to this engagement.
So the rest of the question is kind of talking about ethics and duty and responsibility and stuff. So do we have a professional responsibility to report anything we think is going wrong? We all kind of said, yeah, that's just part of exercising due care. They should have brought it up way, way earlier in the audit, because Tommy didn't end up bringing it up at all. But he considered bringing it up during like the overall final review stage, which, that's not ideal, but that is your last chance to bring it up. So if he hadn't brought it up earlier, he should have brought it up then during the final review. It would have probably had some pretty bad consequences. You would have had to do a lot more work. He probably would have gotten looked at with kind of a Jean Desai, but it is his duty to do that. That's part of exercising due care. And then switching perspectives now from the perspective of the manager, if Tommy had come to him and said, hey, I think Carl's just signing off on work he's not doing, I don't have anything direct to this of what's going on. We kind of felt that would be enough for, at the very least, a cursory investigation to make sure, to see if the claims have merit. If they do, then you really got to launch a full investigation. But even just the slightest, hey, I think something's not being done like it's supposed to be doing, well, you do have to look into that. So that's part of the reason why Tommy didn't, is just because he didn't want the whole hassle that came with looking into that.
Yes, go ahead and applaud. I'm just putting. So when I read through this case, and this is true for a lot of cases, but particularly in this one, I am legitimately curious if, based on what you've read and what you've experienced, do you think that there's a difference in the environment and the way that people approach professionalism today versus the way they approached it 20, 30 years ago? Because keep in mind, many of these cases came from late 90s, early 2000s. And it seems to me that there's a much different approach to the way that partners and senior associates and staff associates interact nowadays than there was back then. What is your thoughts about that? Do you think that it's very similar, or do you say I'm not really sure, I've not got enough experience? Or any thoughts?
It sounded kind of similar to what I dealt with over the summer. I did work with the team lead, but for the most part, I was just working with the senior auditor and understanding.
Because there's a very famous professional wrestler who had a catchphrase says, know your role and shut your mouth. And that was always my impression of working in public accounting. It's like you reported immediately to the person who's above you. And if you had a problem, you didn't go to a partner and say, hey, I've got a problem with the way that you've assigned this out, or I've got a problem with somebody here. It's basically you either handle the problem yourself or you tell somebody above you and risk the consequences. And it seems to me that that's kind of what was going on here, is that Tommy was just saying, I got to handle this problem myself because the partner's not going to listen to me. I don't know that that environment would exist nowadays. But to be fair, I've not worked in public accounting in 15 years, so it's hard for me to judge. I also, I'm curious what your thoughts are on something you said on the very early slides. This is incidental to the case, but it's very interesting with respect to professional conduct in accounting. So Tommy's spouse did not like the long hours that he was working. What are your thoughts about that? Do you think that that's probably still relevant today?
Yeah. Yeah.
I know when I worked in public accounting, the biggest cause of turnover was marriage. And it sounds like a joke, but it really wasn't. It's like once people get into a relationship, obviously you want to spend more time with your spouse. And if you're working 60, 70 hours a week, and your spouse is going to be kind of like you're never at home, it's like, okay, it's cause a conflict. And the easiest way to get rid of the conflict is to get rid of the source of the stress. Spouse. Everything in the spouse, yeah. That sadly, that actually happened in a few situations too, but you know, that's not an approach I would advocate for.
I feel like family has to do that too. Like if you have to start having kids and you don't want to work 80 hours a week, you want to spend time with your kids too.
Well, one of our alums who was actually a senior manager at Reuben Brown now made it very clear is that they have not changed the way that the number of hours they work. They're still demanded to work pretty hard, but the work-life balance has shifted to where people have a lot more control over where they're at and when they do things. And he said he would go out to a client site and he would work till 5, then he would come home and he would have dinner with his family, tuck his kids in, and then once his kids were in bed, he would work some more. And I think that's kind of the balance that's kind of the modern generation has made. It's no longer you're at the client site at 8 and you leave at 8, and you know if you've got anything in there, too bad. It's now partners can actually go and coach kids sports teams and things like that, and something that would not have existed back then. I don't know. That's just something I'm insisting upon new students or new professionals and the students who are going into professional to be aware of, is that it is a lot of work, but the real source of tension is not the amount of hours. It's the people that you interact with that say you work a lot of hours. And so, but then again, you're Truman students, so you're probably used to that already. So, all right, good job.
We took a little bit of a different approach first, where it was more discussion based, so class, get ready to give me your thoughts.
All right, don't be afraid to pull people out specifically.
Madeline's not here, so do the best.
I have every confidence in your ability. You're both high achieving individuals.
Just let me ask you.
Yeah.
$100.
We get paid next week. I'm waiting for it. I'm getting that low. I do 1, 2, 3. You do 4 and 5. Oh wait, which one's it for this?
And this week, you every other week.
Yeah, it's fine. Don't worry.
Okay, so we have Hamilton Wong, he's an insurance accountant.
Yeah, so I'm gonna talk about Hamilton Wong. So he basically, I guess a little background, he went to a public university, so not as fancy as some of his fellow staff members. And he started at the same time as Lauren. So they're both had a friendship relationship, co-workers. And then Hamilton Wong's job was to supervise parts of the audit, inventory, AP, and smaller accounts. But the story basically focused not on the accounts itself, but focused on managing the timesheets. And his job was to do a report and report it to the manager, son. And then she'll talk about the other two.
And then so Lauren, again, they are both like in the same start class, so they started at the same time. And Lauren went to like a private university, so she kind of had was like being higher up and also had the reputation of, she passed her CPA exam like super quick. And so, she's kind of a go-getter. I can't remember the quotes they used for her. But she had a really close relationship with Sun, which was their supervisor, and Sun was in charge of like, figuring out who would be promoted next. And so that dynamic between Lauren and Sun was probably like a point of tension for like Wong, because he saw that like they had a close relationship and wanted to also be promoted well, but since they weren't as close in that realm, it kind of caused issues. Also, like with Wong, he saw that Lauren was underreporting her hours. And so he sees like their close relationship and also that she's underreporting hours, which was often encouraged, because you underreporting hours was, you know, I honestly don't get it. I'm like, why wouldn't you just report your hours? But it was encouraged. And then so that was the term, was like eat time. By like underreporting your hours, it was like you just put it under, because the key objectives of reporting hours is to like ensure like budgets are proper and like you're allocated enough time to like your resources and not overworking your employees. Also help set fees for when you have a client, and then give performance evaluations, and then compliance with obviously regulations and rules with like ACCT, and then again like budget revisions and things.
So these are some of the reasons why Lauren or other people do underreport their hours. One is they feel like their task is taking too long, so compared to like their other peers, and they want to look efficient, so they take their work home and don't tell how much time they're actually spending on their work. And then the time also exceeds the client's budget, so they don't want to go over the budget, and then that will look poorly on the staff and the team and the whole company as a whole. And then the firm, like they think the firm won't pay for the extra hours, and that's like also a fear, so they don't want to lose a client. And then also trying to keep their billable hours ratio looking good. So those are all some reasons to underreport.
And so we had just like 5 questions. Our plan was kind of like have a little group discussion about it, and like talk to your partner for a minute and then like come back together, like someone next to you. But the first one was like, what do you think of Lauren and Sun's relationship? Because it was closer, they would go out to lunch together, whereas like Wong did not have that sort of like relationship with Sun, so there could be some like favoritism there. I don't know. Turn to someone next to you, talk for 45 seconds. Dr. Barnes, what do you think of their relationship?
No, all I know is that I always see this phrase, I want to replace the word Lauren with Cindy, and this.
Yeah, that's so true. I'm gonna play it. Play it up there. What was I thinking? Oh my gosh.
That was the first thing that popped to mind, is that you said Sun instead of Angela, and I was like, Sun, the actual Sun.
Well, because I'm like referring to Lauren and her first name, but then Hamilton, and then why I picked the last name, and then we go back to Hamilton. The book did it too.
If you go to lunch.
I think it just naturally happens. Likeness. Because relationships form naturally, they're not really fabricated.
Yes, that's very true, because I know like with my internship, like I was plugged. No one has a really.
Yeah, that already had an advocate.
Okay, thoughts, what did people think of their relationship?
Well, if people are gonna have favorites, that's just part of being. So, you know, it might suck if you're not the favorite, but hopefully you're somebody else's favorite.
Yeah.
I think there's also an argument, there are people who are just naturally extroverted and people who are naturally introverted, and extroverts are going to develop personal relationships.
It was fine. I mean, you're with these people so many hours a week, you should be their friend, so.
And I guess, like my other thought is like, it's more like Sun's responsibility to be objective in that evaluation. Like you can still be friends, but it's very questionable. Okay, next. Oh.
Yeah, I guess mine's kind of similar to hers. I guess one thing is like when you go into lunches, don't make it exclusive, just you two, because you're in a work environment. It's not just like buddy buddy. Maybe like once a week you guys can go just you two, but like I don't know, if the case seemed like they were going often, maybe every day. So maybe keep it, there's other people on the team, maybe, do team lunches.
And then
That's my.
No, that's okay.
I clocked out. I guess second question, do you think Lauren behaved unethically? So,
Yes.
why, Dr. Barnes?
I think we're disagreeing with Dr. Barnes.
I guess which part?
Talking about the eating time.
Okay, yeah, that's what.
I don't know. I did that mostly as just kind of to like set a goalpost and let
Mhm.
everybody move from that. I think the answer is a lot more subjective than that.
Yeah.
So.
I guess I'm gonna jump to question 4 because I feel like that kind of leads nicely into it. But like, what are the consequences of underreporting?
Where's Dr. Otero?
Um,
Dr. Otero, we need to know about budgets.
The client won't have an accurate representation of what the time for an actual audit looks like. So if in the next year there's someone who doesn't underreport, they're gonna be really confused with why this audit is costing so much more than the previous years.
Alternatively, underreport hours, client happy, they pay less.
Yeah. And I guess kind of going off like the client doesn't know, but also like your HR department who's like scheduling you doesn't know. So you could, then the following year, someone could be assigned your work and then you're doing all these hours, but you're burnt out because they said, oh, here's 50 hours to do all these things, which I thought it would take, but in reality it took you 75 and so.
Yeah, I think another one is just like, it's hard to track how well everyone's doing. One person is saying they're doing better than the other, but at the same time, they're all taking the same amount of time to do the task, but one's just not reporting all their hours. So it's not very integrityable, or honest. So yeah.
I like the word integrity.
CPA I'm learning in audit requires integrity and objectivity. So just remember that one, guys. Lock in.
I guess we'll do question 3. I guess what would you do if you were Hamilton or Lauren? If you're in their shoe.
You can turn and chit chat, buddy, for. Or you can just shout out.
Don't be shy.
So when you ask if what we're doing for Hamilton, are you saying Hamilton Wong or Alexander Hamilton?
Either. Preferably Wong, but if you want.
You can tell me both answers, yeah. So like Hamilton sees Lauren under reporting hours. What does he do about that? And Lauren, I guess, how would you just, I don't know.
Maybe if I'm Hamilton, I confront Lauren directly about it before. I don't know what the success rate of that is, but it might be better to go to them before just, tattletaling or.
I like that because I think it also creates like more of like an environment where like you can talk about it, because that was one thing where it is like a taboo subject they talk about. And so it's like if you go up and just like have a one-on-one conversation, you're not making it a huge deal, but just like almost encouraging them like, hey, like actually report your hours. Like this is. But it did not say anything that he like actually like it just kind of like leaves it blank.
Well, he did say it, but it wasn't like, he said it out like of a joke kind of thing. Hey, you're unreporting your hours, but I guess Lauren doesn't know how much like harm it caused Hamilton, because I think part of the story would kind of, because there's only 2 of us, so we didn't get to tell the whole story. Another reason is Lauren and Hamilton, they're both competing for, it's kind of really important, they're both competing for a promotion. And Sun is their boss to give the promotion, so it's even more important to like communicate with each other, like, hey, like they both know they're in line for promotion. If you're trying to one up the other person, it's probably not very, yeah. So do it again, I guess. Maybe if that doesn't work, and then go to the boss, Sun, or another boss, yeah.
Last question. Okay, how can companies prevent time budgets from interfering with job promotions? And I think this also kind of can apply to us, like when we walk into the workforce, like we are part of the company, so like what's something that like, I guess we can do, obviously.
When we were interning, they actually had like a promotion day when we were there, and they have it on like a set schedule. So as long as you're doing everything you should be doing, you just like kind of naturally get promoted. So that, I don't know, that way there's no favoritism. So
Yeah.
I don't know if that's the same.
So that's an interesting question, because that's the objectively, I think the objectively correct approach. one problem that I found is I have a friend who works for Social Security, and the government standards for promotion are laughably low. Like, my friend can actually complete the work that he needs to do for his job in one day, and basically the rest of the week slack off. And it's because they set standardized goals. And if you think about it, do we want to be setting the goals to what the average should be, or do we want to set the bar really, really high? And I think that's the whole goal of time budgets, is to try to encourage people to perform, but then they kind of promote this type of behavior, really, really poor behavior, where people say, well, my expectation is to finish this in 10 hours. That's what I'm going to report, even if it takes me 12 or 15 hours.
Which I guess something that came up like in my company when I was there was like, people would not report their unbillable hours because like you're on salary. And so if there's like no point, like you already reached your 40 hours, so then you just like don't report, I don't know, some other things in there, which like, I don't know. But I think one thing that that like we found was like with budgeting, like to prevent time budgets, like, oh wait, how can a company prevent time budgets from interfering with job promotions? Was like, again, creating that like open atmosphere to talk about things. Cause I think when you just like hold on to, like, you don't actually process things, it can kind of clear the table, just like letting, like if someone had a relationship or had a conversation with Warren, and Hamilton saying like, hey, like this is not the whole weight of like what a promotion entails. Like here are other factors that are going to be contributed. Yeah. Any other thoughts or questions?
Thank you.
Probably took way too much time.
That's okay. So, yeah, this is actually an interesting topic because time or eating time is something that a lot of firms say, well, we don't acknowledge that. Our partners will actually say, you should report your time exactly as it is. And then they evaluate managerial performance by how well they meet the budget. So it's a contradiction. It's basically saying we want everybody to report their hours accurately, but we use the budgets as a bludgeon to punish people if they don't meet those requirements. And so if you remember from cost accounting, talked about the necessity of budgets. Budgets are only effective if they are a meaningful tool, if they actually promote desired behavior instead of undesired behavior. And I think that's kind of what we run into at DB time. So yeah, good cost accounting lesson within the context of a auditing course. All right, CPA stuff on Friday as well as quiz, more Theranos stuff. See you all then.
Oh, I guess I'm gonna run the epilogue. Is that one really part of the book?
Yeah.